Listen, good evening to all. We are discussed about last class. We are discussed about some concepts. What concepts were discussed in the last class? Right. Sir, in last class, we are discussed about the contract.
Guarantee.
So listen. So in, so in last class, we are discussed about the concept called as a contract of indemnity and contract of guarantee. So contract of indemnity is completed. That is related to the only two sections we are covered. But it's nothing but section 124 and section 125. 124 is a definition of contract of indemnity. 125 rights of indemnity holder. We are completed. After that, we are started with the section 126. There is nothing but definition of contract of guarantee. What is contract of guarantee? Contract of guarantee is a contract in which one person make a promise. One person make a promise to perform the promise or to discharge the liability of third party in the event of his default. That is nothing but contract of guarantee. In case of contract of guarantee, there is a three parties are there. There is a three contracts are there. That is the reason why the contract of guarantee is called as a tripartite agreement. This contract of guarantee is called as tripartite agreement. So out of these three contracts, contract between the principal, debtor and creditor is there. Contract with the creditor and surety is there. Contract with the principal, debtor and surety. There is a three contracts. Out of this principal, debtor between surety, there is an implied contract of guarantee we are discussed in the last class. And between creditor and surety, there is a contract of surety. In that particular situation, generally there is no consideration. So generally what we have studied in foundation situation, generally there is no consideration. Please mute yourself. Some people are. So whenever you are joined, please unmute yourself. Yes, unmute yourself. Wait. So compulsory should mute yourself. So why? Because unnecessarily you are creating disturbance for us. Okay. So listen. In case of contract of guarantee, there is a three parties. There is a three contracts. Out of the three contracts, one of the contract between the creditor and surety, that is contract of surety. In that contract of surety, generally there is no consideration. So there is no consideration, even though there is no consideration, that is a valid contract of surety. But what lawmakers clearly says that so anything is done for the benefit of principal debtor, that is a consideration to surety. That is a concept they can replace the words. Generally, there is no consideration. In our book, there is given a statement called so anything is done for the benefit of principal debtor, that is treated as a consideration to contract of surety in case to the surety. So principal, debtor and surety, there is a contract that is called as implied contract of indemnity. Like that we are discussed in the last class. And also, sir, in this particular situation, so in case of contract of guarantee and contract of surety, they are having coextensive liability. What is coextensive liability? We are discussed in last class also. It's nothing but what extent principal debtor is liable, to that extent surety is liable. Principal debtor is not liable, surety is not liable. This is called as coextensive liability. This is the concepts we are discussed in the last class. Now, sir, today we are discussing about the new concept in the contract of guarantee and contract of surety. What is the new concept in case of contract of guarantee and contract of surety? What is a new concept? There is nothing but types of guarantee. There is nothing but types of surety and types of guarantee. So listen. Generally, sir, generally, guarantee is broadly classified into basis of two situations. Based on two bases, guarantee is classified. One is based on.
Hello, Daddy.
Sir, based on transaction.
ఇప్పుడు క్లాస్ లోనే ఉన్నాం ఇంకొక 1 అవర్.
And also sir, based on person.
అమ్మ బయటనే ఉందిలే.
Like that, generally guarantee is broadly classified into two categories. Some based on transaction, there is some type of guarantee. Based on person, there is some type of guarantee. First of all, based on transactions, sir, guarantee is broadly classified into two categories. One is a specific guarantee. One is specific guarantee. Another one is a continuing guarantee. So ये मतलब क्या है सर? What is specific guarantee and what is continuing guarantee? Sir, specific guarantee. What is specific guarantee, sir? Sir, guarantee is given. So listen. What is specific guarantee, sir? Guarantee is given. Yes. Guarantee is given. Sir, guarantee is given. Guarantee is provided. Is provided for single transaction. For single transaction or for specific transaction. So generally guarantee is given for a single transaction, guarantee is given for a specific transaction. Such type of guarantee is called as specific guarantee. Suppose I wanted to obtain a loan from a bank, you are giving a guarantee to that particular loan. I wanted to purchase a car from that particular party, on credit basis you are giving a guarantee to that particular car. I wanted to purchase a raw material from a person. You are giving a guarantee to me, the guarantee towards a particular purchase of raw material. Like that, guarantee is given for a particular transaction, for a specific transaction. Such type of guarantee is called as specific guarantee. Sir, how, sir? So here two parties are there. So two parties, Ramesh and Suresh. Ramesh is there and Suresh is there. So Ramesh approached the Suresh. I wanted to purchase 5 laptops. I wanted to purchase 5 laptops. Okay, no problem. But credit basis, I am selling my laptops to you. No problem. But guarantee is required. Then Ramesh approached person Ram. The Ram give a guarantee to the Suresh. Suresh, no problem. You provide 5 laptops to that particular party. If that party fail you to pay the laptop amount, then I will pay. Here Ram is giving a guarantee for only 5 laptops, only for that laptop related transaction. So once you can sell the laptop to that particular party, he pay the 5 laptops price to you, then guarantee is completed. Why? Because here guarantee is given for a particular specific transaction. After completion of that specific transaction, guarantee is completed. Such type of guarantee is called as specific guarantee. Next is sir, continuing guarantee. इसका मतलब क्या है सर? Sir, guarantee is given for a series of transactions. Series of transactions. Guarantee is given for series of transactions. So such type of guarantee. Okay, so that is called as continuing guarantee. Sir, what is that series of transaction? Suppose P and Q are two parties, sir. Wife and husband, best example, wife and husband is there. So wife and husband. Then what happens, sir? In this scenario, husband make a guarantee to the grocery shop person. Or a grocery shop person, you can supply a groceries to my wife. Whatever the groceries you are supplied during this 1 year, during this 6 months, then I will pay the money. So this is not for a particular transaction. A series of transactions are happened during that particular period. Whatever the liability arises, then I can pay the money. And then guarantee is given for a one transaction? No. Guarantee is given for a series of transactions. You can obtain n number of groceries n number of times, but during that particular period, or then that is called as continuing guarantee. Guarantee is given for a series of transactions. Like that, based on transaction, the guarantee is broadly classified into two categories. One is a specific guarantee, another one is continuing guarantee. Specific guarantee is a guarantee can be provided for a specific transaction or particular transaction. Continuing guarantee is a guarantee that can be provided for a series of transactions. Okay, so this is a basic segregation based on transaction. One more important point here. Once you can give a specific answer, I can ask one question, they can answer it. So listen. Sir, X is a party, sir. You can approach SBI Bank for a loan, personal loan of 10 lakhs rupees. Then whenever you can approach a bank for a loan, bank require a security. आपके पास securities नहीं है, you are not having security, then bank require a surety. Then what happened? X and Y के पास गए. Then you can approach the Y. Arey Y, please provide a guarantee to me. Then Y can provide a guarantee to the SBI bank. SBI bank, you can pay 10 lakhs rupees to the X. The X fail you to pay, then I will pay. Like that, Y can provide a guarantee to the SBI bank. So this is what type of guarantee, sir? Specific guarantee or continuing guarantee? Sir, here guarantee is given for a particular transaction. Guarantee is given for a specific transaction. Then it is called as what, sir? It is called as specific guarantee. Clear, sir? You are providing a specific guarantee to the SBI bank. So based on your promise, what happened? SBI bank provided 10 lakhs rupees to X. 10 lakhs rupees are given to X. So after 10 lakhs rupees are given to X, you are not interested. Y is not interested to continue as a guarantee. Y wanted to revoke the guarantee. Revoke means they wanted to take back the guarantee. Is possible or not possible? It is possible or not possible. Suppose you are giving a specific guarantee and the bank provided 10 lakhs rupees to X. After disbursement of loan, after the loan is given to X, why not interested to continue? Why wanted to take back? Why wanted to revoke the guarantee? Is permissible or not permissible? It is not permissible. Why? Because, sir, it is a specific guarantee, sir. One specific guarantee is given. You are not having any right to take back the guarantee. Specific guarantee cannot be revocable. If there is a revocable, most of the people answer up to disbursement of loan, they are providing guarantee. After that, they can withdraw the guarantee. This is the biggest problem to the bank now. Then what lawmakers clearly says that once a specific guarantee is given, you are not having any right to take back the guarantee. Then in case of specific guarantee, revocation is not possible. Same scenario, sir. Same scenario. Okay, so same scenario. Suppose here, sir, husband, wife, grocery shop, and husband. So the husband provide a guarantee to the grocery shop or a grocery shop person. You can provide a groceries or monthly groceries or year what. So you can provide a groceries up to 6 months. So up to 6 months or up to 1 year to my wife. If the any liability arises, I will liable to pay. I will liable to pay. Like that, the husband give a guarantee to the grocery shop. Then in this scenario, sir, this is for a single transaction? No, sir. It is a series of transaction arises between 6 months or 1 year. Then he is liable. Then there is what type of guarantee, sir? Continuing guarantee. So in case of continuing guarantee, what I mean to say here, sir, continuing guarantee, you are giving continuing guarantee. Okay, sir, you are not interested. You wanted to revoke the continuing guarantee. Revocation is possible or not possible? Yes, it is possible. But sir, during 6 months or 2 months completed, 2 months complete होने के बाद, you are not interested. You wanted to take back the guarantee, then you can take back the guarantee. But whatever the liability arises during these 2 months, no, you are liable. Then husband is liable. Sir, continuing guarantee can be revocable, but revocable for what, sir? Future transactions. Remaining 4 months he can revocable. Whatever the transactions are already arises, whatever the liability already arises, then the person not having any right to revoke it. There is a two types of guarantee: specific guarantee and continuing guarantee. Guarantee for a specific transaction, guarantee for a series of transactions. So in case of specific guarantee can be revocable or no, specific guarantee cannot be revocable. Continuing guarantee can be revocable, sir. Yes, continuing guarantee can be revocable for what, sir? For future transactions, not for already happened, already arises transactions. This is nothing but based on transaction. There is a two types of guarantee. Clear, sir? Everyone is clear what is specific guarantee, what is continuing guarantee? And specific guarantee can be revocable, continuing guarantee can be revocable. When they are revocable, when why they are not revocable? Everyone is clear about that. Specific guarantee and continuing guarantee. Okay, sir. Then I can ask one question. You can answer it. That is revocable or not? That is what type of guarantee? That is revocable or not? You can answer it. Suppose listen. The answer is no, sir. So P is a person. you can approach a bank, okay sir, for a loan of 5 lakhs rupees. Bank require, obviously bank required securities nahi hai, then bank will approach Q for a guarantee. Q provide a guarantee. Q provide a guarantee of 5 lakhs rupees. No problem, he will fail you to pay, then I will pay. So this is what type of guarantee? What type of guarantee it is? Specific or continuing? It is a specific guarantee.
Specific.
Okay, sir. Yes. As obviously it is a specific guarantee. Already we are discussed. Sir, here he can give a specific guarantee to a bank. Bank provide a 5 lakhs rupees. Bank can provide a 5 lakhs rupees to the P. But what happened? Q provide a guarantee to a bank. Bank not at dispatch the loan. Not at dispatch the loan. Not at pay the money to the P. Since specific guarantee clearly says it is a specific guarantee, he provide a guarantee, then bank provide a loan, but bank not yet dispatch the loan. It will take 2 to 3 days to dispatch the loan, not at dispatch. It will take 2 to 3 days. Meanwhile, before dispatchment of loan, what happened? Q wanted to withdraw, Q wanted to revoke the guarantee. Revocation of guarantee is permissible or not permissible? This is my question. Tell me, sir. Revocation of guarantee is permissible or not permissible? Bolo, permissible or not permissible? So you give a specific guarantee. Permissible. Since specific guarantee cannot be revocable, how you can revoke it? What we have studied, such specific guarantee cannot be revocable. Continuing guarantee can be revocable, but only for future transactions, not for already happened transactions. Yes, we have studied, that is correct. Obviously, that is correct. But now it is a specific guarantee. It can be revocable or not. Tell me, is it revocable or not? So, as per whatever we are discussed, specific guarantee not revocable, sir. But what happens, sir? Specific guarantee also revocable. Yes, that is possible. Specific guarantee also revocable, but before liability arises to the principal debtor. So in this particular example, principal debtor not yet get the money, principal debtor liability not arises, then the specific guarantee can be revocable. General provision, specific guarantee cannot be revocable, obviously yes, but specific guarantee also can be revocable before the liability arises to the principal debtor. In this particular example, principal debtor not at liability not yet arises to the principal debtor. The meanwhile, surety wanted to withdraw, surety can withdraw. That is correct. Okay, sir. Then now, till to now what we have discussed, what is specific guarantee, what is continuing guarantee. Specific guarantee is a guarantee can be provided for a specific transaction. Continuing guarantee is a guarantee it can be provided for series of transactions. Specific guarantee can be revocable, sir. Normally it is not revocable. So continuing guarantee can be revocable, sir. Yes, it is revocable. For what, sir? Future transactions, not for already existed or past transactions. But here's one more important point. Specific guarantee also can be revocable. Yes. Specific guarantee also revocable, but before liability arises to the principal debtor. This is the based on transaction. These are the different types of guarantees. Everyone is clear? Everyone is clear? All right. So,
yes, sir.
Listen carefully. Yes. Everyone is clear. So, one more important point in the specific guarantee and continuing guarantee. So, you provide a guarantee to the creditor, either specific guarantee or continuing guarantee. But these are the both guarantees. The guarantee they can limit their liability. Limit the liability. Yes, sir, they limit their liability. How, sir? Suppose a grocery shop, sir, you are providing a continuing guarantee. 6 months, if any amount of groceries are you are supplied, I am liable, but I am liable maximum of 5,000 only. More than that, I am not liable. And it's a continuing guarantee. 6 months, your guarantee is there. Whatever the transaction arises, guarantee is there. Whatever the liability arises, guarantee is there. But the liability amount is maximum of 5,000 rupees only. So if suppose grocery shop person supplied 4,000, then liable, husband liable, 5,000, husband is liable, 6,000, husband is liable for only 5,000, not for remaining 1,000. Why? Because he clearly intimation given to that he limit their liability. Specific guarantee we can be limited or continuing guarantee limited, but you can limit the liability or liability up to limit only. Suppose your continuing guarantee, so you limit your liability for 5,000. Whatever the transactions are happened, whatever the amount is happened, no problem. I am liable for only 5,000. N number of transactions are happened, I am liable, but what is the maximum amount? 5,000 only. Like in case of continuing guarantee may or kind of specific guarantee may, the guarantors, the sureties limit their liability. This is the broad discussion related to the specific guarantee and continuing guarantee, revocation of specific guarantee, revocation of continuing guarantee, and what is the limited liability, limit their liabilities in case of contract of surety and contract of guarantee. Everyone is clear? Everyone is clear or any doubt? Clear? I am not doubt on the. Okay, sir. Everyone is clear? Yes. Yes. Sir, possible use one note, sir. One note. What is the time? Yes, sir. If possible, use one note. Okay, one note. Yeah. So, I will try. One note. Yes. Microsoft OneNote. Okay. So, everyone is clear up to that? Generally, types of guarantee. What is the types of guarantee, sir? Types of guarantee. Types of guarantees based on transaction completed. Based on transaction. Now, based on person. Based on person. So based on person, what are the different types of guarantees? The answers. Suppose you are a person. So one of our friend, yes, one of our friend, Krishna is there. So one of our friend Krishna is there. So Krishna recently qualified chartered accountant. So then he can apply for campus interviews, campus jobs. Then one of the organization, Big Four, Infosys, TCS, whatever it may be, that companies can select the fresh qualified chartered accountants. Whenever, sir, in a company, chartered accountant post is very important. Why? Because he is a part of the organization. Everything, so whatever the accounts, auditing, preparation, everything, sir, with the chartered accountant. So chartered accountant position is very important in every organization. As a professional, it's very important. Then what happened? Infosys company, Are Krishna, you are qualified, no problem. We are giving a job in our company, no problem. But chartered accountancy job is very important in every organization. Everything related to you, every matter known to you, everything transparent to you. So in future, if you are using misconduct, you are doing misconduct in the premises of organization because of your activities, any loss incurred by me, that is biggest problem to me or not. So you know all valuable information related to a company because you are a chartered accountant, you are an auditor, then these information you are misusing or your misconduct in the premises of organization. Because of you, if any loss arises to me, what is my scenario? What is my position? Then what happened? Info says, okay, no problem, Krishna, job is always available to you, but you should get a surety from any person, any financial or any means goodwill related, any reliable person. You should get a surety, then we will provide a job to you. Then Krishna approached me, sir. Okay, sir. In campus, I get the job in that particular company, sir. But one company put a condition: we are ready to provide a job, but you should get a guarantee. Then in this scenario, what happens? Sir, I provide a guarantee to the Infosys company. Infosys company, no problem. You will give a job to that particular person. He can't do any fraudulent matters. He can't do any misconduct. He cannot perform any misrelated activities in the premises of organization. Because of that, any losses arises, I will compensate the loss to you. I will discharge the liability. I will pay the liability to you. Here, guarantee is given for what's the character, conduct of a person in the premises of the organization during the course of employment. I am not giving a guarantee to a loan. I am not giving a guarantee to any transaction amount, purchase, sale. Not like that. I am providing a guarantee to a person, character, candidature of person during the premises of the organization during the course of employment. So these type of guarantees related to a based on person, character, candidature in the premises of the organization during the course of employment. Such type of guarantee is called as fidelity guarantee. Fidelity guarantee. This is only one type of guarantee case based on person. Based on person, we are providing a guarantee towards a person for his character, candidature in the premises of the organization and in the during course of employment. Then such type of guarantee is called as fidelity guarantee. These are the types of guarantees as per Indian Contract Act section. So as per Indian Contract Act 1872. Based on transactions and based on person, specific guarantee and continuing guarantee, fidelity guarantee. Okay, so everyone is clear. These are the different types of guarantees. Everyone is clear? Everyone is clear or having any doubts related to that? Clear? I have any doubts on here. Chapan sir, everyone is clear or having any doubts? So white. White sir. What? Clear. Okay. Then I will display one question. You are able to answer that particular question. Yeah. So question number 9. Question number 9. Everyone is clear? Visible or not? Question. Question number 9. Question number 9. May 2019 examination question. Yeah. Manoj guarantees for Rajan, a retail textile merchant, for amount of 1 lakhs, for which Sharma, the supplier, may from time to time supply goods and credit to Rajan during the next 3 months. After 1 month, Manoj revokes the guarantee. When Sharma has supplied a goods credit of 40,000 referring to the provisions of Indian Contract 1872, decide whether the Manoj is discharged from all liabilities to Sharma for any subsequent credit supply. What would be your answer in case Rajan makes default in paying back Sharma for the goods already supplied on credit of 40,000 rupees? So this is an examination question in the year of 2019. Examination question. It's an examination question. Here, sir, you are supplied 1 lakh. Okay, so you are giving a guarantee. What type of guarantee, sir, it is? Textile merchant, retail textile. Whatever the supplied, supply of goods, it's a continuing guarantee. Yes. But limit the liability up to maximum of 1 lakh rupees. Sir, continuing guarantee can be revocable or not? Yes. For what, sir? For future transaction. Already happened liability, how much amount, sir? 40,000. Then you are liable for how much amount? 40,000. Okay, sir. Join, sir. Specific guarantee cannot be revoked by the surety if the liability has already occurred. A continuing guarantee may at any time be revoked by a surety as a future transaction by notice to the creditor. but a surety remains liable for the transaction already entered. As per above provision, Manoj discharged with the relation of subsequent credit surplus. Yes, for future transactions he can discharge, but already happened 40,000 rupees liability. No, he is liable for that 40,000 rupees. Clear, sir? Everyone is clear? Question number 9. Clear? Then question number 10. Question number 10. Nilesh guaranteed the honesty of Srinath in the employment of Gurudev. Srinath was found guilty of dishonesty in the course of service, but Gurudev continued to employ with him and did not inform Nilesh of what has occurred. Subsequently, Srinath committed further acts of dishonesty. So, okay, sir. Only this concept. This concept we will discuss later. Okay, sir. This concept. This concept later discuss. But this, sir. Nilesh granted the honesty of Srinath in the employment of Gurudev. Srinath was found guilty of dishonesty in the course of service. Then what discuss the liability of Nilesh? Liability is there or not? What type of liability? What type of guarantee, sir, it is? Is it fidelity guarantee or not? Guarantee is provided for what, sir? Character, condition in the premises of organization during the course of employment. If the any loss arises, he is liable. Clear, sir? Everyone is clear? Specific guarantee, continuing guarantee, and fidelity guarantee. Everyone is clear? Sir, clear? Even doubts?
Yes, sir, clear.
Tell me, sir. Everyone is clear or not? You have any doubts related to this discussion? Today's discussion types of guarantees, specific, continuing, and fidelity. Revocation concept. Okay, so continuing only can be revocable. Specific also can be revocable before liability arises. But in all the guarantees, they can limit their liabilities. Everyone is clear up to types of guarantees? Clear? I'm going to doubt on this, sir. So answer me, sir, first of all. Clear.
Yes, sir, clear.
Clear,
Clear,
sir.
sir.
Next. Okay. Next. So now we will discuss about the concept. So in case of contract of surety, there is a three parties. There is a three contracts. Okay, so principal, debtor, creditor, surety. So so meanwhile, class, you will unmute yourself, sir, first of all. Okay. So here, in case of contract of, mute yourself. So in case of contract of guarantee, there is a three parties. This is contract number 1, this is contract number 2, and this is contract number 3. 1, 2, and 3. Already we have studied. Three parties, three contracts. Consideration is not there, but anything is done for the benefit of principal debtor. That is a consideration to surety. That is concluded in the statement. So listen carefully. So here, in every contract, generally, sir, every contract is having parties having some rights or not? Rights or not? In this scenario, sir, in case of contract of surety also, surety is having some rights. Surety rights. Okay, sir, rights of surety. Sir, here surety rights against whom, sir? Sir, surety rights against the principal debtor, surety rights against the creditor. Obviously, sir. Why? Because surety is entering a contract with the creditor. Surety is having right against creditor. Surety is entering a contract with the principal debtor. Surety is having right against principal debtor. Why? Because whenever you are entering a contract with other party, you are having right against that particular person. That is nothing but in Indian contract that creates just in persona right against that particular person. Like a surety is entering a contract with the creditor, he is having right against particular person creditor. Surety is entering a contract with the creditor, principal debtor, then he is having right against principal debtor. Like that, now we have discussed about the concept called as rights of surety. Now we have discussed about the concept called as rights of surety. What is the different rights of surety? Rights of surety. So generally what happened? The rights of surety. So rights of surety is broadly classified into three categories. One is against principal debtor, or against creditor, creditor के पास creditor, or against co-sureties, So ये मतलब क्या है sir? What is who are co-sureties? So you require 10 lakhs rupees loan, you can approach me. Sir, provide 10 lakhs rupees surety to me. I said, sir, are not possible 10 lakhs. Out of 10 lakhs, I will provide only 3 lakhs surety to you. Then what happens if for remaining 7 lakhs, you can approach another surety? No, me and that particular person together we are giving 10 lakh surety. Then together those two people are called as co-sureties. Like that, the surety is having a right against other co-surety also. What are the rights we will discuss? So against principal debtor, what are the rights? Against principal debtor, what are the rights? And against creditor, what are the rights? First of all, against principal debtor, what are the rights? First of all, a right of indemnity. Right of indemnity. Why? Because sir, the contract between the principal debtor and the surety is implied contract of indemnity. He is an indemnifier, other party is an indemnity holder. If any loss arises to the surety because of principal debtor conduct, because of creditor conduct, surety has a right to recover from the principal debtor or not. Same thing we are studying in contract of guarantee, contract of indemnity. Sir, principal debtor failed, sir. Principal debtor failed. Then I will pay the money. Then I incurred the loss because of principal debtor conduct. Then I can recover such loss from the principal debtor or not. Yes, right of indemnity. Indemnity means replace the loss. I have a right to recover the loss. Yes, that is the right against principal debtor. Or you are failure to pay, no, you will pay my money to me. Like that, one of the right to a surety, right of indemnity. Okay, sir. Next one. Next one. A right of subrogation. So what is meant by subrogation? So listen. Sir, here principal debtor is there, creditor is there, surety is there. So principal debtor pay the 10 lakhs rupees to the creditor, pay the 10 lakhs rupees to principal debtor, surety provide a surety. What is my question? So principal debtor fail you to pay. Who is liable to pay? Sir, surety is liable to pay. Surety pay the 10 lakhs rupees. The moment when surety pay the 10 lakhs rupees to the creditor, whatever the rights related to a creditor, right to file a case, right to sue for 10 lakhs rupees, whatever the rights related to the creditor, all the rights of creditor transfer to whom, sir? Surety or not? Now surety is acting as a creditor or generally who can sue on me? Creditor. Who can demand money? Creditor. Now the moment when surety pay the 10 lakhs rupees to the creditor, whatever the rights related to the creditor, all the rights are shifted to whom, sir? Surety or not? Yes. So that process, this process is called as subrogation. What is subrogation, sir? Subrogation is nothing but stepping into the shoe, sir. Stepping into the shoe, stepping into the shoe of into the shoe of creditor. So what is the shoe of creditor? And as a creditor purchased the shoes, new shoes, and went to the creditor house and step into the shoe of creditor. No, so that is wrong. That is not stepping into the shoe of creditor. Stepping into the shoe of creditor means whatever the rights related to the creditor, all rights are shifted to the surety. Now surety is acting as a creditor. That concept is called as subrogation. These are the two rights available to the surety against the principal debtor. A right of indemnity, yes, I have incurred loss, I can recover from you, yes, surety right. Right of subrogation, subrogation means whatever the rights of creditor, all rights are shifted to me. Now I can act as a creditor, stepping into the shoe of a creditor. As a creditor, I can claim money from you. That is nothing but right of subrogation. Clear, sir? These are the two rights available to the surety against principal debtor. Everyone is clear? Against principal debtor, clear or not? Next, sir. Against creditor, creditor के पास, creditor के साथ what are the rights? What are the rights, sir? First one. Sir, right to claim securities. Right to claim securities. So what is the right to claim securities, sir? So listen. So in this scenario, sir, the moment principal debtor approves the creditor for a loan, creditor requires securities and securities are surety. So what happened? Creditor are required a security, should provide a security. Principal debtor के पास gold है, keeping gold as a security. Creditor said that okay, it is not sufficient. Again, you should get surety also. Again, principal debtor approach the surety and get the surety from surety. So as on due date, principal debtor failure to pay, who is liable to pay? Surety is liable to pay. Then surety pay the amount to the creditor. The moment when surety pay the amount to the creditor, creditor return the gold to principal debtor or return the gold to surety as a return the gold to surety. Okay, sir. This is the right available to surety. Whatever the securities held by the creditor, I have a right to claim securities. Yes, surety has a right to claim for securities after payment whenever principal debtor paid. Okay, sir. There is nothing but a right to claim securities. Clear? Clear, sir? Then right to claim securities. Suppose, listen, sir. Principal debtor is there. Principal debtor. Creditor is there. Surety is there. They can provide a 5 lakhs rupees loan. Surety provide a 5 lakhs rupees guarantee. Normally, it's a valid contract of surety and valid contract of guarantee. It's a valid. Okay, so this is contract of guarantee valid. What happened? What happened? Between creditor and surety, there is another transaction which is not related to a contract of surety. He is a seller of tires and he can purchase the tires. Or he suppose he is the seller of tires and he purchased the tires. Okay, so he is a buyer and he is the seller. Not related to a contract of surety, sir. Not related to a contract of surety. He is a seller of tires, he is a buyer of tires. One fine day, this creditor purchased 100 tires from the seller. Each tire is 10,000 rupees. Like that he can purchase. Now, how much amount he is liable to pay? 1 lakh rupees he is liable to pay. Okay, so credit sales that should be liable to pay after 1 month. So this is another transaction. It is not related to a contract of surety, sir. So surety cannot do the business. Creditor cannot purchase the goods from surety. There is no such provision. They can do their own businesses. That is a business transaction, separate transaction. This is contract of surety. As on due date, what happened? Principal debtor failed to pay 5 lakhs rupees. Then who is liable to pay? Surety is liable. Surety is liable to pay 5 lakhs rupees. What surety did? Array, creditor, you are liable for 1 lakh rupees to me, no? Because of such a sale and purchase of tires, I can deduct that 1 lakh rupees from this 5 lakhs. I will pay only 4 lakhs rupees. Like that, surety can deduct or not? Yes, possible. That is the right of a surety. Surety can right to set off. Right to set off. Set off means one debt can be adjusted to another debt. That is the right of surety. These are the two rights available to the surety. against creditor. Okay, sir. The two rights against principal debtor we have studied: right of indemnification, right of subrogation, and two rights available to the surety against creditor: right to recover securities, right to claim securities, and right to set off. Okay, sir. That is nothing but right to set off. These are the rights against principal debtor, rights against creditor. Last one is rights against co-sureties. Rights against co-sureties. Sir, listen. Very important for exam. Sir, co-sureties, sir. Sir, two or more sureties provide a surety to the creditor. These two sureties are called as co-sureties. These two sureties are called as co-sureties. Then what is that, sir? What law clearly says that unless otherwise anything is mentioned in agreement or contract, co-sureties are contribute equally. So unless otherwise anything is mentioned in an agreement, co-sureties are contribute equally, and co-sureties, they can limit their liability also. Yes, so they can limit their liability and they can contribute equally. How, sir? Listen. Sir, here surety 1 and surety 2, sir. These two sureties are providing, sir, how much amount, sir? Here 5 lakhs loan is provided. The two sureties are given a 5 lakhs rupees surety to the creditor. Nothing is mentioned. Then principal debtor failure to pay. What is the liability of surety 1? 2.5 lakhs. What is the liability of surety 2? 2.5 lakhs. Then unless otherwise anything is mentioned, they can contribute equally. Clear, sir? And also, sir, here these two sureties, they can contribute money S1, S2, another surety also there, S3. Okay, so S3 is there. So here loan is provided 6 lakhs rupees, sir. 6 lakhs rupees is loan is provided. Then surety principal debtor failure to pay. Who are liable, sir? Sureties are liable. What is the proportion they are liable, sir? 6 lakhs rupees, common 6 lakhs. What is the proportion? 2 lakhs rupees, 2 lakhs rupees, and 2 lakhs rupees they are liable. Unless otherwise is mentioned, they contribute equally. Sir, here, listen, sir, listen carefully. Sir, they can limit their liability. How, sir? Suppose S1 said that, alright, you are providing 6 lakhs rupees, then I am liable for only 1 lakh rupees. S2 said that I am liable for only 3 lakhs rupees. So S3 say that I am liable for only 2 lakhs rupees. Like that, they can limit their liability at the time of making a surety to the creditor. Surety to the creditor, sir. Surety 1 is there. So listen. Here surety 1 is there, and surety 2 is there. Surety 3 is there, and creditor is there. Creditor provide a guarantee to the principal debtor. Surety provide a loan of 6 lakhs rupees. Then how they can give a surety, sir? That person give 1 lakh surety. This person give 3 lakh surety. This person give 2 lakh surety. This is the limit. Okay, sir. Now, what happened? Principal debtor failure to pay 6 lakhs rupees. Then sureties are liable or not? How much amount they are liable, sir? Sir, contribute equally, sir. But they can limit their liability, you know. What is the contribution? 1 lakh, 3 lakhs, and 2 lakhs contribution. Like same proportion they can contribute. Suppose what happened? Listen carefully. Principal debtor pay 3 lakhs rupees. 3 lakhs rupees paid. 3 lakhs rupees paid. But 3 lakhs rupees he failed to pay. For 3 lakhs rupees, who is liable now? Sureties are liable now. What proportion they are liable, sir? How they can liable? Tell me, sir. Sir, principal debtor is liable to pay 6 lakhs rupees, but principal debtor pay the 3 lakhs rupees. He failed to pay 3 lakhs rupees. Then what is the liability of 3 lakhs rupees? Surety 1, surety 2, and surety 3. What is the liability, sir? Tell me, sir. What is the liability? What is the liability, sir? What is the liability of surety 1, surety 2, and surety 3? 3 lakhs rupees, what is the liability? So listen, 3 lakhs rupees liability, 1 lakh, 1 lakh, 1 lakh, sir. 1 lakh, 1 lakh, 1 lakh. That is the liability. Okay, so 1 lakh, 1 lakh, 1 lakh, that is the liability, sir. So you cannot, liability 1:3:2, you cannot distribute like that. So clear, sureties liabilities are contribute equally. Suppose, sir, he paid 2 lakhs only, sir. Listen carefully. So he paid the 2 lakhs only. 4 lakhs he failed to pay. Then 4 lakhs he is failure to pay. What is the liabilities of surety 1, surety 2, surety 3, sir? Sir, first of all, 1 lakh, 1 lakh, 1 lakh liable. Sorry, sir, sorry, sir. So 1 lakh, 1 lakh, 1 lakh liable. But what is the remaining amount, sir? 1 lakh rupees amount. This 1 lakh rupees amount contributed by these two people only. Why? Because, sir, his maximum limit is 1 lakh only. He's contributed only 1 lakh. He limit his liability. But this 1 lakh rupees can contribute how much, sir? 50,000 and 50,000. Like that, 1 lakh 50 and 1 lakh 50. So second scenario, sir. Sir, he is liable. Sir, he pay only 1 lakh rupees. Remaining 5 lakh rupees is failure to pay. So remaining 5 lakh rupees is failure to pay. How is liable, sir? How he can liable? How he can liable, sir? Here 1 lakh, 1 lakh, 1 lakh liable, 3 lakhs is completed. Remaining 2 lakhs is there. So 2 lakhs, how they can contribute, sir? 2 lakhs rupees, 1 lakh and 1 lakh. 1 lakh, 2 lakh, 2 lakh. So contribution is equally, remaining amount, contribution always equally, sir, no doubt. But they can limit their liability. Most of the students are doing mistake here, sir. They can limit their liability 4 lakhs and if 5 lakhs in ratio low, they can distribute. That is wrong. No, sir. Co-sureties contribute equally, but they limit their liability. Sir, here also equal liability, sir, but he limits the liability. That is the reason why he is liable for 1 lakh. So here also they can limit the liability, sir, but they can limit the liability up to 2 lakhs. He is liable for only 2 lakhs. Contribution always equal, but they can limit the liability up to limit only they are liable. This is nothing but right against co-sureties. Co-sureties are contribute equally. Co-sureties limit their liability. These are all our rights of surety against principal debtor, against creditor, and against co-surety. Everyone is clear, sir?